Joining me right now, Phil Palumbo, founder, CEO, Chief Investment Officer of Palumbo Wealth Management. Thank you so much for being with us. So this afternoon, we'll be hearing from Palo Alto Networks. You saw many of the names in the group do have some down arrows today. Your thoughts?
The key thing about Palo Alto and CrowdStrike, it's very simple. As we get more and more embedded with AI into our economy, these companies will continue to be beneficiaries, not victims of AI, which is originally the thought process, which is why we saw their stocks decline back a couple of months ago, and now they actually ramped up big time. So that's the real story behind these companies, and really all investors really need to understand. So it's more a view on what's your view on AI as you think about things going forward, and it's only going to accelerate, which is going to help both the top line and the bottom line for both of these companies.
So when you look at where they are now at the current valuations, you said they are the beneficiaries of what's happening with AI. When you look at the valuations, your thoughts?
Valuations only become a problem, whether it's the broader market or whether it's companies, when there's a fundamental breakdown. There is not a fundamental breakdown with these companies. In fact, the exact opposite is happening, where everything is looking to accelerate. So if fundamentals are still there, listen, nobody loves to play high valuations in anything, but if you believe in the fundamentals and you understand the fundamentals and that continues, the stock will continue to follow that. I think they can grow into their earnings with margins of 76 and 78%.
And when you look at technology, are you feeling more optimistic, or what potential risks are you watching?
Yeah, so I'm a big believer that we're in the early stages with this AI revolution that we're seeing. I think valuations, as it relates to the Mag 7 and some of the big ones like NVIDIA and Microsoft and Google and Amazon, which were big owners of those businesses. And we think that, going forward, if you compare it to 1999, they're way below the forward multiples of 1999. And these companies fundamentally are continuing to grow and they continue to be strong. And again, going back to what I said before, if we're in the early innings of the AI revolution, these companies will continue to perform well.
Interesting. And you're looking back to 1999. I mean, are you making any similarities or comparisons, or really showing? You said they're much lower in forward-looking PE. In other words, they have better value than some of those did in 1999, right? I mean, is that what you're saying? And also, are there risks to tech at all then?
There's always risks, right? When you're an investor, there's always risks that you're faced with. But again, you just got to make sure you understand the fundamentals as an investor, which I think a lot of people don't pay attention to that. You have to go back to history to understand markets. History doesn't repeat itself, but it does rhyme. And in 1999, there was this tremendous euphoria and pricing of many companies that were zombie companies that had no debt, and it's had something internet related to it. And that's why those companies were moving higher. Where today, I do believe it's a different story. These companies are so fundamentally sound in many aspects, whether it's growth, top line and bottom line, and free cash flows, which I know a lot of the cash flow now free cash flow is going to build outs, which is necessary because there's tremendous demand there coming from the consumer. And by the way, listen, nothing's ever perfect. Nothing goes straight up and, straight up and to the right. We wish it would. And of course, you're going to get backups, back and filling. You're going to get bear markets, and that's all part of the game. That's what happened back in 1995 to 1999, where you had 15 corrections, but the NASDAQ went up 3x during that period of time. So, this is all part of being an investor in the markets, but there's still strength in these tech companies for sure.
You did say, look, maybe the volatility during the peak war escalation may be behind us, but you do think that a pullback, you expect a drawdown of about 10 to 15% in the S&P 500 before the market finishes higher on the year. So somewhere between now and the end of the year, you're saying we'll see a correction or worse, right? And that might be a buying opportunity. Is that right?
That's absolutely right. So the idea behind more volatility or volatility increasing from here, first of all, we are overbought on the upside here, right? So we're definitely stretched in the very, very short term, looking at many short-term indicators. Number one. Number two, Kevin Warsh, which I've been talking consistently about, I think he's going to be phenomenal, but I do think he is someone who's going to disrupt. And I think the bond market specifically needs to get used to him and what he's looking to do as he looks at the different way he looks at inflation and the gauges he's going to use, and he's talking about it consistently right now, and then shrinking the balance sheet, right? All of that stuff is disruptive and different. And for that, that's going to create volatility in markets.
Let's talk about some of the names that you think are good investment ideas or potential investment ideas. Microsoft, let's start with that. Where do you see it headed?
So Microsoft fell in the same camp as other software companies, where investors thought that AI was going to disrupt software companies. That's why we saw these companies get hit really hard, and Microsoft was included in that. What people have to understand about Microsoft, they're always late to the game with new rollouts because of security reasons. That's number one. Number two, 95% of Fortune 500 companies are using Microsoft services, which means that the data is all in Microsoft, which is the graphing, et cetera. Microsoft wants to be the AI operating system for these agents. They want the agents to sit on top of all their data. So Copilot will become a success. Right now they are using Claude within Copilot and OpenAI as well. So Microsoft, I do believe, and you're going to see it in the numbers and you saw it last quarter, that Copilot will continue to be used more and more. Profit margins are tremendous on that business, and I just think that they're going to shine as it relates to AI.
So you said it's becoming the backbone of enterprise AI in your notes. You also have Uber and Joby on your winning names that are investment ideas. Tell me a little bit about each one of those.
Yeah, so much like when I talked about on the show with Google, everybody thought with ChatGPT back in November 2022, the search was over. Meanwhile, Google crushed it, and their stock price is up tremendously since we last met on the back of why I thought Google was going to be one of the biggest beneficiaries of AI. And here we are with Uber now, where the concern is around autonomous vehicles, which I completely understand. However, Uber has the network. 200 million people visit them every month in terms of their software. So they have the network. They're making the right investments in AV. Their CEO is, I think, one of the best CEOs around. They have an incredible brand and product. So I believe they'll be the beneficiaries of autonomous driving because of their networking and the partnerships they're doing right now with NVIDIA and many other car manufacturers for the fleet. So and Uber's trading right now at a cheap valuation. So I do think there's some really nice upside overall, and it's a free cash flow margins that are actually growing, not declining. So it's a great story longer term, but you have to be patient.
Yeah, and you also had Joby Aviation. Thank you. Good luck there at those names,
Thank you.
Microsoft, Uber, and Joby. Philip Palumbo, great to see you. Thank you so much.
Great to see you.
Founder, CEO, Chief Investment Officer, Palumbo Wealth Management.